Hello and welcome to The Trade. Well, let's get into the technicals, what the charts are telling us. Zoran Kresovic joining us from Blueberry Market. Zoran, welcome back to you. Let's begin with equities on the local market. Of course, the S&P ASX 200 having recently taken out new record highs. What trends are you seeing on the chart?
Well, overall, Andrew, we are seeing an uptrend. So if you're purely speculating on the technicals, the recent breakout of an all-time high has obviously demonstrated that we are in a medium to long-term uptrend since around the lows back in 20th of March 2026, which was the level at 8,258. So that uptrend is fully in play now. But I guess what we are seeing at the moment or over the past few is actually we're seeing a bit of a reversal at the top at that level of 9,326. So what that's demonstrating to me, Andrew, is obviously the market is actually taking a bit of a breather in profit taking. We do understand the month of July was actually a very, very significant and profitable month overall, where out of last 20 years, ASX has gained approximately 2.2%, or if you're looking at over the last 40 years, it's averaged around 2.7%. So despite being slightly below the threshold in the month of July, August tends to be a little bit more volatile, primarily on the basis that we've got the reporting season coming through, and a lot of that will depend obviously on the high valuations and expectations, obviously overly stretched, not only for the local market but for the global market as well, Andrew. And we've seen that with the banks over the past few days. We've seen somewhat disappointing results coming from CBA, quarterly results coming from ANZ, also Westpac, where the loan applications have dropped between 15 to 20%. And as we do anticipate, and we do know that financials play a enormously big role when it comes to ASX 200 and market weighting, we do expect obviously banks to drop off, and we've seen CBA come off 0.7%. As a result of that, we're actually seeing ASX take a bit of a breather. So the point that I'm trying to raise here is that a lot will depend on the reporting season, which we are obviously fully underway. And I think we will expect probably a little bit more volatility coming into the market over the next few weeks. So we do expect a bit of a choppy period right now. Support levels on the chart here are anywhere around 9,000. That's a nice round number. But we could expect, once the reporting season done, to actually head into seasonally adjusted bullish period for the market, and hopefully we actually go into that November-December period where the markets will continue to flourish.
Well, Zoran, if you want volatility, you can certainly get that in the oil market. Let's go there, and what we're seeing at the moment, of course, contingent on the news flow out of the Middle East. And I see that Brent is up, around 7% over the past month. What trend has developed?
Yeah, it's a bit of a tip for that, Andrew, and oil never tends to disappoint. But fun fact for you guys, or for everyone, for the listeners out there, is, I was under the impression that Brent and crude oil are the best performing assets, for the calendar year since 1st of January 2026, but it's not the case. It's actually natural gas, which has outperformed all the assets globally, gaining 115%. So it's followed through by copper, it's followed through by crude oil and Brent oil as well. So we are anticipating quite a bit of volatility. We do understand that things in the Middle East are not unfolding as positively as one would expect. Obviously, there's a lot of backwards and forwards movement happening in the market. There is a lot of positioning, there is a lot of optional markets, there's a lot of traders that are actually trying to ride this volatility in full swings, and as we anticipate for this kind of falling flag pattern to be broken, and that's what it's done in a rising market, at that level of between 66, 94 and $93, any news that comes from the Middle East, any further escalation of the tensions, any involvement of the US, or potentially war coming into a full effect, with crude oil would like probably to head higher. Now, at the moment, I'm not so sure that there will be the case. I still see a bit of resistance around the $95. It's getting into a narrow range, crude oil, so it is actually kind of tightening up. Some playbook that we've seen prior to the war breaking out, and when it did happen, it broke out of the narrow range. It has actually exploded towards the $118.78. Now, I'm not saying that is the case and that will happen in a short term. However, these things take longer. If no conclusion comes or agreement comes into effect, we do understand that there will be quite a bit of tension and lost momentum, and we could expect crude to potentially head higher.
And so let's stay with commodities with a look at gold and compare it with Bitcoin. Now, gold's actually at a 2-month high, whereas Bitcoin languishing in the mid-60s.
Yeah, a lot of traders and market analysts tend to talk about decoupling of gold and Bitcoin. I guess one would be, conclusion would be to say that gold has gained quite a bit of momentum and gone on a bullish front, from the 4,000 level. And I guess investors and traders would be kind of expecting that, or were waiting for that move to unfold such a long period of time, and that line has been broken, obviously. And there's the primary reason for it is because obviously we've seen US dollar kind of come off, delayed interest rate hikes, and Fed not being so hawkishly bullish. The overnight CPI data and non-farm payroll numbers that came out last week. So that's kind of one play that right now momentum is driving all the flow into gold. We're seeing a lot of central bank buying from the countries like Turkey, China are buying excessive amounts of gold in the month of July, around 20 tons. So that's the one playbook. It's falling through so that's actually a kind of bullish momentum that's buying all the headlines, and it's hard to be bearish in this market at the moment over the past couple of weeks. However, contrary to that, what we're seeing in Bitcoin is actually something somewhat similar. If you have a look at the charts back in early 2024, around 2025 peaks, both gold and Bitcoin were actually moving in the same direction and having an extraordinary bullish run. However, that's actually changed. And whilst Bitcoin has up 5% from an all-time peak in January, Bitcoin dropped around 50%. So it's actually been a deeper pullback on Bitcoin as opposed to gold. However, it has consolidated around $65,000. It hasn't actually broken out of the range and given that bullish momentum at the moment, which is what gold has actually done. So on such cases, liquidity plays a big part. And if we are seeing a lot of liquidity getting pulled out, rotational play from all different asset classes, including equities, especially NASDAQ, and commodity sector and US dollar, then we could see Bitcoin gain momentum. But I do want to stress one last thing, which is quite important. We are heading in a seasonally adjusted bullish period for cryptos and Bitcoin, which generally, if looking at historical play, starts around in September, early October. So while the opportunity might have been missed if you're a trader of Bitcoin and you didn't get your hands onto silver and gold, we could see that run come through. And as long as we break $65,000, we might get an entry on the upside, and hopefully Bitcoin can gain some momentum and continue or reverse its down run, and hopefully we see some upward moves.
All right, Zoran, great to get across what you're seeing on the charts. Thanks for joining us in Blueberry Markets. And that is the trade.